Imagine waking up tomorrow to discover your country owes $36 trillion. It's a number so big, it's hard to even picture. Now imagine the annual interest payments on that debt are bigger than the entire US defense budget. This isn't a Hollywood movie script. This is the reality for the United States, right now. The country is caught in a debt spiral, and it's accelerating. In the next few minutes, we're going to break down exactly why America can't pay this debt back, how it's spinning out of control, and what happens when the rest of the world finally loses faith in the US dollar. So, how much does the US actually owe? The official number is a staggering $36 trillion. To put that in perspective, if you spent $1 million every single day, it would take you nearly 100,000 years to spend $36 trillion. The interest payments alone are now costing over $1 trillion a year. That's more than the entire Pentagon budget, which pays for the Army, Navy, Air Force, and Marines combined. And it's not slowing down. Based on the current path, the US debt is projected to hit $60 trillion by 2035 and over $100 trillion by 2045. This isn't just a steady increase anymore. We are witnessing exponential debt acceleration. Every new dollar borrowed adds even more to the interest, which then requires even more borrowing. It's a vicious cycle. This leads to the critical question: why can't America escape this spiral? There are three main reasons locking the country in a no-exit loop. First, a huge portion of US debt is short-term. Around 70% of it needs to be refinanced within the next 6 years. With interest rates much higher now than they were a few years ago, every time the government rolls over its old debt, the new interest payments explode. It's like refinancing your credit card debt at a much higher rate. Or monthly payments just shot through the roof. Second, the government is now borrowing money just to pay the interest on its existing debt. This is the classic worst-case scenario, a compounding loop that feeds on itself. And third, demographic and political realities make a solution almost impossible. An aging population means Social Security and Medicare costs are skyrocketing, adding trillions in mandatory spending. Politically, no one has the courage to make the tough choices. Substantially cutting spending is seen as political suicide. Raising taxes high enough to make a real dent would cripple the economy, and openly defaulting on the debt is unthinkable. So, the country is trapped. So, who exactly owns all this debt? It's not just one entity. Foreign countries, like Japan and China, hold about a quarter of it. However, they've been reducing their holdings recently, which is a worrying sign. The Federal Reserve itself owns another quarter, which it bought by essentially printing money. Domestic investors, like pension funds, insurance companies, and regular people, own about 35%. The final 15% is held internally by the US government itself, in accounts like the Social Security Trust Fund. Here's the problem. If foreign buyers keep stepping back, the US has to find new buyers. This means it has to sell more debt to its own citizens and institutions. To convince them to buy, it has to offer higher interest rates. But higher rates mean higher interest costs for the government, which just accelerates the debt spiral even faster. It's a dangerous feedback loop. Now, some people might say, hey, America had huge debt after World War II and everything turned out fine. But that comparison is deeply flawed. The situation today is the complete opposite of what it was back then. After the war, the US had a young, growing workforce, a booming industrial economy that dominated the world, and very low interest rates. It was a perfect storm for growth that allowed the country to simply grow its way out of debt. Today, the population is aging, not growing. Economic growth is slow. Government spending is incredibly high, and so are interest rates. On top of that, the world is becoming more fractured, with rising geopolitical tensions. The old playbook of just growing your way out of the problem simply won't work this time. With the situation so fragile, there are several triggers that could ignite a full-blown crisis. A major recession would crush tax revenues and force more government spending, worsening the debt. A geopolitical shock, like a major war, could cause investors to flee to safety, dumping US bonds. A crisis in Social Security or Medicare could force a political showdown. We could also see another banking system meltdown, forcing a massive bailout. Or, a simple but chaotic fight in Congress over raising the debt ceiling could spook markets. The most dangerous trigger: foreign investors deciding to dump their US Treasury bonds all at once. If any one of these events happens, it could cause bond yields to spike. That means government borrowing costs would explode overnight, and the debt spiral would go into overdrive. So what would a fast-moving crisis actually look like? It would happen quickly. On day one, a trigger event causes bond yields to surge. This means the price of existing bonds crashes. Financial institutions that used these bonds as collateral would get hit with massive margin calls, forcing them to sell assets and creating a domino effect. By day two, the Federal Reserve would likely panic and launch emergency quantitative easing, that's just a fancy term for printing trillions of dollars to buy up the bonds and stabilize the market. In the following days, the US dollar would weaken as a flood of new money hits the system. Investors would start to panic, pulling their money out of the country. Within weeks, we could see the government impose capital controls to stop the money from leaving, limits on bank withdrawals, or even a bank holiday where the banks are shut down. This would be paired with rapid inflation as the value of the dollar plummets. It wouldn't be unlike the crises seen in Greece or Argentina, but happening to the world's largest economy. The harsh reality is that there are no good solutions here. America really only has 4 options, and all of them are bad. Option 1. Massive spending cuts. This is politically impossible and would likely cause a severe recession. Option 2. Huge tax increases. This would choke the economy and is also politically toxic. Option 3. Print money to pay the bills. This leads to high inflation and destroys the value of the dollar, hurting every single citizen. Option 4. An open default, where the US just admits it can't pay. This would trigger a global financial collapse, as US bonds are the foundation of the entire system. Since none of these are viable, the most likely path is a soft default through a combination of money printing, high inflation, and a steady debasement of the currency over time. They won't default openly. They'll just pay you back with dollars that are worth a whole lot less. In the end, math always wins. It's a simple, brutal truth. If a country's debt grows faster than its economy, a collapse is not a matter of if, but when. America isn't walking into this crisis. It's sliding downhill in a full-speed debt spiral. The real question is no longer whether it will happen, but how soon. Thanks for watching. If you found this breakdown valuable, be sure to subscribe for more.